General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, let's do the work. So, month of August. Notes, environment, trend continuation, but with summer liquidity quirks. EQ, big range days are possible, especially around tech flows. SPY, strong directional weeks, interspersed with pauses. Focus, scale responsibly, expect volatility, not smoothness, trail intelligently. So NASDAQ is the 13 weeks of days. Last week was interesting. We got a big down day. This is FOMC Fed's held rate steady. Smart money reversal at an old volume balance. And then this was GDP. We also had a lot of tech earnings too. So this is low that month. That month's close. So this is July low as we going into August. Bias bullish narrative context. Tech buyers seem to step in last week after the Fed fund rate. Market maker model profile seen. Distribution. They definitely closed out some short positions on Friday. Most tech earnings have been good. Only one Magnificent Seven company is left, and that's NVIDIA. According to market insights, SPY has more volume, but now that money is flowing back into tech, we may need to lean over there for the buys. SPY chart last week was kind of leaky. The SPX cash chart got the same smart money reversal, same day, just different with low. Like we had a volume imbalance for NASDAQ. SPY didn't go as low as NASDAQ. NASDAQ took out this equivalent. So this is actually bullish S&T, and SPX is just stronger in that sense. But the smart money reversal occurred at this week low, cleaning this up. This should offer as a BPR right here as well. Bullish market maker profile saying accumulation. Yeah, so we basically just appear worse here. You can see how the difference, like they're closing shorts, and just adding to their longs. NASDAQ getting more attention now. Looking at gold, kind of been in this range since we had this old new week opening gap down. Just been chilling in between this high and this low. But seasonality kicked in. It's really bullish on the cot. So me looking at this, we up under the 200 day. This is the time. Metals been getting beat down, but seasonality should land to some buys. Market maker model profile saying this is the original consolidation. Looking at silver, not really interested in silver, but it still looks bearish. Even though there's real demand for silver, where AI gold has the volume and the motion for a better swing trade. So more people are more passionate about gold. KPI targets 6 and 8% gain a month. Experience focused plan to trade. Study theme, commit to more logging a day and during the trade process. Run charts. So this we got OPEC today. PMI Monday. Look at this. This ADP non-farm clothing change. That's probably still the real reliable number. I don't think they fixed how they was getting these numbers yet. So it's gonna be interesting on Wednesday. Then NFP on Friday. There you go. NF week protocol Monday through Wednesday should be textbook. Thursday expect chop. After NFP, we should have the Judas for the month activated and CPI's week 2. So it's just getting back to regular weeks. It's the NASDAQ COT. Like the commercials are closing out some of their long positions. Non-commercials are added to long, land, short. Commercials are not adding to their longs. They sold them to these dudes. They added on to their shorts. Alright, so let's see here. All the open interest is commercials, short. There we go. For NASDAQ, mildly bearish, best interpretation, consolidation or rally fade, reversal risk. Not enough evidence for major downside call. High conviction breakout trade. Key point, commercials and large specs are both net short, while small traders are net long. That means bearish, but the Wilco reading of about 2.5% of open interest is not extreme. SPX, commercials closing out shorts. Commercials adding on heavy on the long side. Non-commercials adding on the long side, closing out their shorts. So COT bias rallying to moderately bearish. Commercials net short 89,481. Wilco style reading 4.46% of open interest. Small traders strong net long 108,000. That's a contrarian warning. The best expectation consolidation with downside reversal risk if price weakens. Kind of standing on big move, yet commercials are net short. They became less bearish this week. Yeah. It's gonna be interesting here. They 72% pricing in a hike. And Kevin Walsh he moving funny. Kevin Walsh looking at a rate hike for September, but I don't think he will hike rates for the midterm. It's politics. He says he's watching the 2 year closely, so I'll watch it with him. As of now, he sounds like he's going to get his orders from the bond vigilantes. So he really just said he was going to be watching the market. So that means he's looking at the 2 year. Might as well watch it with him. I don't think he's going to hike no race though, but now that's speculation because they needed to hike rates. We're going to earnings. Palantir's Monday. Tuesday, we got Pfizer and AMD. SpaceX is going to get all the attention. Wednesday, we got Elon Musk and SanDisk. Shopify is going to be interesting too for that swing trade. Sentiment, I feel like bearishness went down just a little bit, and this went up just a little bit. Pretty much unchanged. For a weekly view, we want to use 9 weeks worth of days. Smaller POV. I'm gonna see what we do around here. Leaning bullish though. If there's really gonna be bullish, we should never want to come back down here. Like it should run fast, at least until CPI. And I expect NFP to be good. They've been saying labor is not a problem. It's gonna be more of cost, inflation, PPI, PMI, CPI. Okay. Yeah. Basically the same POV, just smaller view. Here's a little more interesting. This is the range after this new week opening gap. So we gapped down. And we kind of just created this range inside of this range. And so we can get like a double purge maybe. Maybe a sweep at a high, sweep at a low. And then bullish delivery. Either way I'm gonna be watching it just to see how it plays out. Skill focus is gonna be planning trades, journal intent, more long for the smaller time frame deliveries. No case study game plan. 0.5% got to build back up after getting smacked in July. Strike day looking for Tuesday, maybe high low of the week, just based on really the earnings. We got AMD, SpaceX. I expect that to be a crazy candle. Let's see. Yep, NFP week, be careful. All right, that's that on that. Y'all have a good day. Peace.